Over the last 7 trading days, small caps have quietly run ahead of the pack, climbing above their much larger cousins in the S&P 500 and the Russell 1000 indexes. Even with mega cap tech and the chip trade coming back, small caps are starting to steal the spotlight. And this recent surge might not just be a one-off pop, as this tends to be what happens this time of year. Small caps are now positioned to ride out what historically tends to be their best 3 months of the year over large caps. And that's what we're breaking down on today's Stocks in Translation. Now, here's some basics you need to know. First, we're going to be talking about 2 different indexes, the Russell 2000 and the Russell 1000. The Russell 2000 contains about 2,000 stocks with a market capitalization or market cap of under about $4.5 billion. Those are the small caps. The Russell 1000 is like the S&P 500. It has the large and even the mega caps, only stocks over about $10 billion in market cap. And in a minute, we're going to take a look at the ratio of these 2 indexes, the Russell 2000 divided by the Russell 1000. But next, small caps often lag their larger cap cousins. But from about mid-December through early March, they've got a strong track record of doing even better. Now, this doesn't mean that history says they should be green this whole time. If they do go down, they just tend to go down less than large caps. Now, let's take a look at a chart of that ratio of the Russell 2000 divided by the 1000 over time. This is the work, by the way, of Jeff Hirsch over at the Stock Traders Almanac. And this chart starts in July and goes for 1 year. And there are 2 lines. The white line is the average of the ratio going back to 1979. That is our map. And the green line is what's happened so far since the start in July. When small caps are doing better than large, the line moves up. And when they do worse, the lines move down. Those numbers at the extreme left and right of the chart just refer to the ratio of the 2 indexes. They're really not that important. Now, notice how that green line is approaching the shaded area, which is the sweet spot for small caps. From mid-December through early March, it looks like the outperformance might have already gotten started this year, but we don't want to get too far ahead of ourselves. Now, let's call out the differences here because size matters. Small caps mostly tied to the U.S. economy, at least more so than large caps, and more sensitive to interest rates and credit conditions. And that's why they can swing harder in both directions. Large caps, on the other hand, tend to have a global revenue stream and stronger balance sheets, so they tend to hold up better during downturns and slowdowns. Small caps also tend to have less concentration risk. They're not dominated by 5 or 10 stocks the way the S&P 500 or the Russell 1000 are. But picking small cap stocks can be a tricky business, as analyst coverage tends to be lower. You really need to research what you're buying. So let's talk technicals now. In this 5-year chart of the iShares Russell 2000 ETF IWM, you can see that this is now the 3rd time that price has traded above that key 240 level, which translates to the 2400 level on the Russell 2000 index. Each breakout attempt was quickly reversed after it failed, and when we hit it in October, there was a steep sell-off again. Small caps have truly frustrated investors over the last few years, so a big test is going to be if IWM can hold that 240 level. Maybe bullish seasonality means a difference this time, but that is an open question. So here's what to watch next. First, can the Russell 2000 finally hold that 2400 level and IWM its 240 level and stay above them? These are the lines in the sand. Next, do small caps continue to outperform even with normal pullbacks? Seasonality, it doesn't mean that every day needs to go up. It just means that the odds tilt in their favor. Then, are you trading broad exposure with an index ETF like IWM, or are you trading individual names? Remember that stock picking is even harder in the small cap space. So look for strong balance sheets, and yes, that means some fundamental analysis.